Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee, and joining me are my co-hosts, CoinDesk Managing Editor of Global Capital Markets, Lawrence Lewitinn, and Managing Director of International Content, Emily Parker. Good morning, Emily and Lawrence.
Good morning.
Morning, good to see you. All right. Well, we're seeing a pop in the crypto markets. Taking a look at Bitcoin right now. The CoinDesk Bitcoin price XBX index is currently trading at 40,885, narrowing in on that 41,000 barrier right now. Bitcoin is up 3.3%, but really the charger here we're seeing is Ether. The CoinDesk Ether price ETH index, ETX index is trading at 2768. ETH is skyrocketing over 7% over the past 24 hours, and that's sending the DeFi market soaring as well, up $607. That is up 7.4% over the past 24 hours on the new DFX CoinDesk's DeFi index. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. So is this due to the London hard fork or what, Lawrence?
I'm going to guess yes. I'm going to guess that people are pretty much relieved that the market just went like, whew, that's done. We're seeing a lot of call buying and some crazy. Today, Omkar Godbole posted an article. He wrote a piece about how people were buying these crazy high strikes in the options market for Ether. So they're buying $40,000 strike puts. Now, ETH obviously is trading a fraction of that. So these are options that are expiring several months from now. So that doesn't necessarily mean they're that bullish, but it does mean that they're biased towards the upside. And so and that's all coming about now with London out of the way.
Mm-hmm. At the same time, there are still some headwinds with this infrastructure bill being debated in Congress. Emily, any concerns around that?
Yeah, there are a lot of concerns around that. It's kind of chaotic. Our colleague Nick Day is going to be on very soon to talk about it in more detail. But basically, yeah, nobody can seem to agree on what this is. You know, the latest amendment seems to prioritize proof of work miners, which is kind of contradictory to the U.S.'s supposed goals of making mining more green and more environmentally friendly. It seems like nobody really understands what this infrastructure bill, crypto provision, is actually supposed to do. But the market doesn't seem to be reacting, or maybe, the market sees this as a sign of regulatory clarity. I don't know, but on the surface, it doesn't seem like the greatest moment for crypto.
Right. Well, time to get in with our CoinDesk Global Policy and Regulation Managing Editor, Nick Day, who's also the editor of CoinDesk's The State of Crypto newsletter. Hi, Nick. You've been monitoring, obviously, the infrastructure bill. So what is the latest we're hearing out of Congress?
Yeah, good morning. It's been a pretty crazy, 12 hours night. So what we're looking at right now, tomorrow, Saturday, at around 11 a.m. Eastern, the U.S. Senate is going to convene to start, debating and discussing this and possibly start holding votes around noon. And there are two specific crypto-related provisions and amendments that we are paying attention to. The first is the Wyden Toomey Lummis Amendment that we've spoken about before. This would create some exemptions in a crypto provision in the infrastructure bill that would allow, miners, node validators, software developers, parties that are non-custodial, non-broker type entities to be exempt from the crypto provision, the infrastructure bill that would otherwise require them or potentially require them to fill out broker-specific reporting forms for the IRS. Late last night, around 7, 8 o'clock or so, another amendment was introduced by Senators Mark Warner and Rob Portman, being one of the original authors of the crypto provision, that would instead only create a specific carve-out for proof of work validators. So, apparently favoring, just one specific consensus mechanism over the others. And it would appear that the White House is, in support of this more narrow provision. They released a statement last night saying we support this amendment over the other one. In response, Senator Ron Wyden, who is one of the senior Democrats, he's the chair of the Senate Finance Committee, pointed to proof of work's environmental concerns as one reason why he favors his amendment.
Oh, sorry.
Yeah.
Nick, what do you, so do you think that, how did this proof of work thing actually happen? Is it just that like people don't really understand? Because it kind of contradicts this idea of like bringing environmentally friendly mining to the United States. So like, how did this weird amendment happen? Was it just like a mistake or an oversight, or was it just kind of like people are basically horse trading in this infrastructure bill and nobody really thought about the potential ramifications?
It could be any combination of that. I haven't seen anything definitive at this point, but I think one of the leading theories is that the original authors of the provision, which again, this is a bipartisan bill negotiated by Senator Portman and with the White House's support. Maybe that they just wanted a more narrow carve out, and that's where they landed. It is questionable, whether or not they thought through the full ramifications. I couldn't say at this point, but the fact that it is a very specific, narrow, targeted exemption kind of supports that theory.
So, Portman, what's going on with him? Like, really, are you hearing anything? Like, what's his axe? I mean, like, what's going on here with him that he's coming up with all these, like, I don't want to say wackadoodle stuff, but it's kind of out there.
So if I had to speculate, I'd say a good chunk of this just comes from the fact that this infrastructure bill was supposed to be paid for through the provisions within its pages. And yesterday, the CBO came out with a where it said, it could add about $350 billion to the deficit over the next 10 years. And so, anything that might compromise some of the pay-fors could be an issue. The JCT reportedly said yesterday that the modified Wyden-Toomey-Lummis amendment would knock about $5 billion off the overall score of the crypto provision, which was originally supposed to bring in about $28 billion over the next 10 years. So, I mean, $5 billion out of a $1 trillion bill isn't a whole lot, but it is still a fairly, significant chunk of money. And so it could just be that they're trying to preserve as much of that revenue as possible.
Wow, incredible. Nick, thank you for monitoring the situation for us out of DC. Appreciate your insights. That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com. All right, well, even so, SEC Chair Gary Gensler also saying this week that many cryptocurrencies are securities and are being exchanged on crypto trading and lending platforms that need to register with the SEC. Gensler adding that he is very concerned about investor protection, as many crypto platforms do not afford users the same protections as many regulated entities like the New York Stock Exchange. Joining us now to discuss is Crypto.com Global Head of Growth, Henrik Johansson. Welcome to the show, Henrik. So Crypto.com has experienced explosive growth within the past 12 months, over 10 million users and 90 cryptocurrencies available on the platform. You could also grow your portfolio by earning up to 14% interest on your crypto assets, according to your website. Now, when you hear Gary Gensler addressing trading and lending platforms like Crypto.com as a cause for concern, what do you make of his comments?
Well, I think as with any new technology that has an enormous power to transform and to empower people, there will always be a lot of concern and a lot of questions at the beginning of the journey, lots of ups and downs. And given that I think the crypto space is still relatively early in its journey, just like streaming was maybe 8 years ago when I joined Spotify, I think this is to be expected to some extent.
Now, Henrik, how are you guys offering the rates that you do? We're looking now in the markets, and interest rates, for instance, have gone back down. We're seeing leverage lowering on the exchanges, which means the demand to borrow currencies has gone down. So where exactly are you getting that margin? And is it threatened by federal regulators and state regulators, such as what we're seeing with BlockFi?
I think that's a very good question. Now, me being relatively early in my journey with Crypto.com, I think I'll have to defer that question to maybe some of my colleagues who are a little bit more in on the ins and outs of the company at this point. My journey with Crypto.com started about a week ago, so I still have a lot of things to wrap my head around and to get myself sort of immersed in.
So if I understand correctly, your mission is global growth, which is a really interesting area because, right now we're seeing countries all over the world scrambling to figure out how to regulate the crypto industry. And we're seeing a lot of chaos in the United States in particular, with its infrastructure bill and trying to figure out crypto taxes. So I guess my question for you is twofold. One is, how concerned are you about the regulatory environment in the United States? And two, where do you see growth coming mostly from other countries in the world?
I think this is actually a very interesting question because right now, what is really sort of holding back scale and reach, I think, within the community is scale and reach, meaning that what needs to happen next for growth to really take off is for growth to take off. So it sort of sounds like a catch-22, if you will, but I think what we need to look at now, and what I think a lot of our friends in the community and some of our competitors probably as well need to think about is how do we expand the reach of the services? How do we get more people into the ecosystem, regardless of where they are in the world? Now, Crypto.com, obviously, I think one of the big reasons why I joined this company and why I'm so sort of bullish on its growth trajectory is trying to play very, very nicely in this space, and obviously has a very good relationship with the regulatory bodies. So we will continue to work very closely with those and make sure that we, when we launch products and when we launch markets and when we aggressively grow the reach of the service, we do so in a way that is compliant in any way possible.
So you worked at Spotify.com before this. What do you see as the similarities between what's going on in streaming music and crypto, other than the fact that Napster's gone, and Napster was essentially Bitcoin before there was Bitcoin when it came to file sharing?
Great question. Now, I would say that the largest similarities between streaming and crypto is actually a bit of a time lag here. Again, sort of going back to the slightly more nascent days back in the early 2010s and so on. There were a lot of concerns, obviously, about streaming as well. Is it going to be good? Is it going to, if I get rid of my CDs, what happens next? So lots of confusion and concern, both on the consumer side and also on the provider side. Now, obviously, that's not the case anymore. Streaming has become pretty much the default way of accessing music in many, many countries and regions around the world. And this has been sort of a result of changing consumer preference and behavior, and therefore changes on the industry side. I believe crypto and cryptocurrencies and other blockchain technologies are on a very similar journey, though obviously a little bit further behind. So I would say the similarities are maybe not so much on where streaming sits today, but rather on where it was a few years back.
Mm-hmm. I wonder, with Crypto.com, you've been on a hiring spree, and now you have 1,500 employees. You've set a target of taking Crypto.com to 100 million plus users in 2 years. How do you plan to do that? And piggybacking off of Emily's questions, where do you see that global growth?
So first of all, I think it's important to remember that the entire ecosystem is now expanding very rapidly. And as I think you probably have already seen in the recent research report from Crypto.com, the size of the crypto community actually doubled in just 4 months recently. So there is already explosive growth happening, and it's actually quite spread out across the globe, I would say. But I think even more important is for all of us, Crypto.com included, to achieve these very ambitious goals, is that we need to grow the category overall. So we need to get more people into the ecosystem overall and actually learn more about cryptocurrencies, understand what they are, how they are beneficial to you, and how they can empower you, and so on. So I think this growth mission is not just about acquiring lots of users into the Crypto.com ecosystem, but also about growing the sector, growing the industry overall.
Any one geography that any geographical area that you see the most growth coming from?
It's a good question. I think it's actually quite spread out at this point in time. Obviously, there's been a lot of growth in North America territories recently. But one thing that we are quite keenly looking at is how do we balance our growth across all of the regions. So I wouldn't say that I want to point out one specific region and say that this is right here, we see explosive growth right now. But rather, the question is really how do we get all of these regions to actually rise together over the coming 24 months.
And finally, what made you decide to make the jump from streaming to cryptocurrencies, fintech?
Thank you for asking. Well, I think it's kind of similar to what made me join Spotify actually about 8 years ago, which is this idea that you're seeing something that is very, very powerful, that has the potential to really drive positive impact for a lot of people. It's a technological breakthrough that I think is meaningful to lots of people around the world at a very sort of deep and meaningful way. And it's kind of the same thing that I saw in the music industry 8-9 years ago. You see this fantastic technology, but it needs to scale. It needs to reach out there in order to actually drive changes in behavior, which will then impact the industry. And I think everyone can agree that more access to more music is very good for a lot of people. It spreads messages and ideas and so on. And similarly, I believe that cryptocurrencies and blockchain technology has the power to really be a force of good for a lot of people. So getting a chance to be part of that journey and actually play a role in it is, to me, very, very exciting.
Yeah. Well, Henrik, congratulations on the new role. Looking forward to seeing how you expand, and appreciate you coming on the show. That was Crypto.com Global Head of Growth, Henrik Johansson, coming up, checking in on Asia and a crypto markets update with quantum economics.
From fueling local economies to connecting global markets, the future of money is taking shape now. Crypto State by CoinDesk will bridge communities of crypto investors, thought leaders, and developers to tell the global story of decentralized finance. Join us for this virtual event series as we make stops in Israel, Bahrain, and the United Arab Emirates to dive into the movements that are disrupting markets and changing communities. Register today.
Happen in Asia crypto markets. Here's Angie Lau of Forecast News.
Welcome to the Daily Forecast, August 6th, 2021. I'm Angie Lau, Editor-in-Chief of Forecast News. Coming up, Binance announces a ban on new derivatives products accounts in Hong Kong. Ethereum fork provides huge trading boost, and India's Olympic winners get more than just medals. Let's get you up to speed from Asia to the world. First up, crypto exchange Binance has announced an immediate ban on new derivatives products accounts in Hong Kong. It's the first major cryptocurrency and digital assets exchange to bar access to such products in Hong Kong, the company said. All derivatives products related to futures, options, margin products, and leverage tokens will be restricted. In a statement, Binance said it will also be announcing a 90-day grace period for users from Hong Kong to close their open positions at a later date. No new positions will be able to be opened within those 90 days. In a tweet, Binance CEO said, "This is one of many proactive measures Binance is taking to help establish crypto compliance best practices worldwide." Just last week, Binance announced users in Germany, Italy, and the Netherlands would no longer be able to open new futures or derivatives product accounts. Binance's move comes as it continues to limit its product range and step up compliance amid growing scrutiny from regulators around the world. Meanwhile, Ethereum's highly anticipated London upgrade has gone live on the network. The hard fork finally happened at block 12,965,000 at 8:33 p.m. Hong Kong time on Thursday. It saw the rollout of 5 Ethereum improvement proposals, or EIPs. EIP 1559 is seen as the most significant of these, as it alters the way transactions are processed and how miners are compensated. It will also reduce the supply of Ether tokens on the Ethereum blockchain. Now, Hong Kong-based crypto exchange AAX told Forecast News the upgrade captured the attention of the cryptocurrency market.
The trading volume and trader numbers started to pick up at around 4 p.m. yesterday as the Ethereum London upgrade approaches, and it reached its peak at around 9 p.m. to 10 p.m. Hong Kong time. The trader numbers and the trading volume nearly doubled the day before.
Ether's price peaked at $2,840 at the start of the Asian trading day on Friday. Other blockchain layer 2 tokens have also seen positive effects from the upgrade, with Polkadot, Chainlink, and Uniswap all gaining over 20% in the last 7 days. That market boost also saw Bitcoin up 5% at almost 41,000 US dollars as of 4 p.m. Hong Kong time on the final day of the Asian trading week. And in the top 10 for cryptocurrencies, Uniswap up 7.5% and Ethereum up 3.5% compared to the same time 24 hours prior, as the fork continues to make its mark. And finally, India's Olympic medalists now have even more to celebrate. Indian crypto exchange BitBNS tweeted that they will all be awarded cryptocurrencies in the form of a systemic investment plan, or SIP, to kick off a savings plan, if you will, post-medal life. The investments made in Bitcoin and Ethereum are worth almost $2,700 US dollars for gold, just over $1,300 for silver, and $675 for bronze. Athletes just need to complete the Know Your Customer process in order to access the plans, which will be structured over a 3 to 5 period. You know, crypto isn't the only additional reward those medalists will receive. They also get fiat cash from state governments. And one athlete was offered free Domino's pizza for life after she said all she wanted to do after gaining her medal was to eat a slice. At the time of recording, India was 65th in the medal table with 2 silver and 3 bronze. The games are set to conclude in Tokyo on Sunday. Not bad for amateurs. And that's the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Editor-in-Chief Angie Lau. Until the next time.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
Let's have a live look at Bitcoin. The CoinDesk Bitcoin price XVX index is flirting with that $41,000 resistance line. Bitcoin is up almost 9% over the past 24 hours, and the CoinDesk Ether price ETX index is at 2783, also soaring about almost 8% over the past 24 hours. And the DFX CoinDesk's DeFi index is at 610, DeFi taking off almost 8%, advancing over the day. And joining us now to discuss the crypto markets is quantum economics analyst Alexandre Lores. Welcome to the show, Alexander. So we're seeing the crypto markets popping up, and many believe this might have something to do with the London hard fork. Is that the case? Is this the London glow?
Yeah, thank you. And absolutely. I think there's a number of factors. The market is already more generally bullish, and the fact that this happened is only going to, increase that. Any asset, in basic economics, any asset that becomes more scarce is going to increase in value. And while that didn't completely change Ethereum, and there's not a hard cap, it's going in that direction, and it's going the direction that, I think the community wants. And it's very exciting. As long as I've been looking at the markets, almost in all cases, Bitcoin is the main driver for all the other markets. And for the first time, I'd say, or not the first time, but one of the rare times yesterday, Ethereum was the main driver.
So are you actually saying that Bitcoin's price surge is being driven by Ethereum? Because that's a fairly controversial position. I think some of the sort of Bitcoin maximalists might take issue with that.
I'm sure they will. And I wouldn't exactly say that. I would say that the Ethereum price action is based on Ethereum, not Bitcoin yesterday. But I think Bitcoin is ranging.
Is Bitcoin reacting to Ethereum?
I wouldn't say fully. It didn't hurt. It's kind of like a match next to the gasoline, and things just kind of lit on. But I think Ethereum was the starter. Bitcoin is range bound generally between 29 and 41 since the 19th of May. And it's already bullish, already went up close to 40. So any potentially bullish news could pop it up. And if it breaks over this resistance at 41, there's not much resistance until 50. So I think you're already looking at a somewhat bullish market that would take any news and use to go nuts. And in this case, it happened to be the Ethereum London hard fork was the biggest news. So maxis will probably get upset with me on this, but Ethereum is definitely the driver of the market since yesterday.
Alexander, there were a few days ago, we saw some massive movements in Bitcoin from various wallets from one to another. some of the largest movements we've ever seen, and also definitely some of the largest we've seen since mid-May when China did its crackdown or stopped financial companies from dealing with crypto companies in China. What do you suppose that's based on? Why are we seeing these large movements in wallets? What do you think is happening here?
I think there's a number of large whales that are very bullish. And if we break over 41,000 towards 50, anyone in a position to make a large trade would be intelligent to do so at the beginning of the, right after breaking over this resistance. So I think there's a lot of market players that are interested in entering the space with the cheapest possible price. I think the regulation that was discussed earlier, as concerning as it is, ETFs and mutual funds and other institutional players are waiting for the regulation to come down the pike so they can enter. So I think there's a lot of big players ready to enter the space. And I think it's an extremely bullish time. At the same time, skepticism and bearishness is healthy in markets as well. And if we don't break, Bitcoin doesn't break through 41, in the short term, it could also be headed down back to 30.
So I don't know if you've been following all the chaos in Washington with the infrastructure bill, which is, we have $28 billion being floated around for crypto tax reporting. It doesn't seem like this is having that much of an impact on the market. I mean, do you think that it is? It seems like it would, right? I mean, this is a pretty big deal for the crypto industry, but what's your take on that, on the effect on the markets?
Well, as you mentioned, it's not, which is surprising. Right before we went on, I actually looked at a number of the DeFi tokens. There isn't a single even blip, even in DeFi. So normally you have a buy the rumor, sell the news. But in this case, the rumor isn't having the bearish effect that one would expect. And it is 9:30. So the North American traders have woken up, and I see nothing but bullish price action. Again, is it because this could be a step towards an ETF? I don't know. But, I also think that it's possible that the market hasn't really decided which way they think it's going to go, because there are two, opposing proposals, even though I understand the White House supported one of the bipartisan proposals. It's definitely not a set thing. You're going to need enough votes. So if there's bipartisan pushback against it, nothing is going to get approved due to the, very tight Senate majority of the Democratic Party.
Alexandre, we'll leave it there, but thank you for weighing in on the crypto markets and appreciate your insights. That
My
was
pleasure.
Quantum economics analyst Alexandre Lores. Coming up, we'll take a look at predictions markets with PredictIt. Stay with us.
CoinDesk Indexes, the market standard for crypto assets since 2014. The CoinDesk DeFi Index is our latest product and provides insight and exposure into decentralized finance. Our indexes are key for investors looking to access and understand crypto markets.
The CoinDesk DeFi Index is the best tool for a diversified approach to this compelling new category of digital assets.
The CoinDesk DeFi Index, measuring the investable DeFi market.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
Welcome back. Will New York Governor Andrew Cuomo be out of the job soon? Who will be the next German chancellor, or will Trump run again? These are some of the questions posed by predictions market PredictIt, a project run by New Zealand's Victoria University in Wellington. Joining us now with more is PredictIt CEO and co-founder John Aristotle Phillips. Welcome, John. So why should people pay attention to prediction markets?
Well, a couple reasons. Prediction markets have proven to be quite accurate, not perfect, but quite accurate in forecasting future events. These are event contract markets. And on PredictIt, it's a $1 winner-take-all contract. and you can buy multiple contracts on an event either occurring or not occurring, where the price is set by the traders, and the price from a penny to a dollar reflects the odds of an event occurring. So prediction markets are quite accurate, and they're also it's riveting watching how these predictions play out.
So, John, we have a lot of decentralized. You have a lot of decentralized competitors in the prediction market. You have Augur, Polymarket, Hedgehog. So, are you looking yourself to go into the go on the blockchain at any time soon and provide those contracts through a sort of more decentralized platform?
So, that's not in the roadmap at this time. We've got over 200 markets that traders can trade on right now. The market seems to be, I mean, it's liquid, and there are many of the viewers of your shows are traders already. The plan for PredictIt is to continue to focus on those political markets where there's either an economic or a political event which may or may not occur, some of which you mentioned in the intro.
Has there ever been a situation in which a prediction market or something that happened in prediction market has actually somehow determined what happened later, where there's been that kind of cause and effect?
That's a great question, and the answer is we don't know. The reason that this prediction market was set up almost 7 years ago was to study how prediction markets operate. I can tell you this: the research so far shows that once somebody has a little bit of skin in the game, and it doesn't have to be a lot, it can be $20, $50, $100, or $1,000, they are more likely to focus on what they think is going to happen rather than what they want to have happen. So it is a antidote to fake news in a way, because if you make your predictions and purchase your shares based upon fake news or emotion, you're going to lose your money. On the other hand, if you calculate carefully and absorb the relevant information, discarding all the noise out there in terms of a future event, you're going to do pretty well.
So right now, as you currently function, you of course you're going to end up running into regulatory issues. Are you pushing for any reforms, the regulatory reforms? You or any of the other decentralized platforms, for instance, are you trying to get the U.S. government and other governments to allow more, to let you guys flourish?
Sure. So, I can't speak of what others are doing, but I can say, speaking for PredictIt, we're in a very productive spot right now, because if so long as the market pertains to elections and politics, which is quite broad, we are able to offer some really compelling markets. I mean, things like who's going to be the Republican nominee in 2024, or the Democratic nominee for that matter. These are very important. These have very important implications for people's everyday lives. And those are the markets that we're concentrated on, and we're doing quite well in those markets.
Do you see companies try to hedge their? Do you see the companies try to hedge their exposures on by using, let's say, PredictIt or any other or the decentralized ones? Do you see any that kind of level of bets being taken right now on your platform?
There's some hedging that goes on, but most of this has to do with forecasting a pure play political outcome. Will Governor Cuomo be impeached before September 1st, for instance? Or, as I said, who's going to be the Republican nominee? Will the infrastructure bill pass? These are political events that have significant implications for shareholders and investors worldwide. And those are the markets where the prediction markets actually excel.
So getting back to your competitors, though, do you see them potentially crossing the line when it comes to offering some of the contracts that they do?
I can't speak to what their regulatory or non-regulatory strategy is. We operate in the United States. We've got over 100 universities and academics who are affiliated with PredictIt, who are using the anonymized trading data for their research. And we have some international universities as well. And that's really the direction we're going in. I mean, if you look at some of the markets where we've got tens of millions of shares traded, it's quite promising. And there's a lot of different areas that you can invest in. As far as other markets, offshore markets, I really can't speak to that.
Are these people trading and taking part in these predictions markets, are they sophisticated though? And or can it be subject to the kind of mob mentality that may come with fake news, as you mentioned, and sentiment?
Oh, I think people latch on to all kinds of news, fake, real, imitation, or otherwise. They do, and traders as well. But what happens with PredictIt? First of all, there's a position limit, so there's an $850 position limit in any of these markets. And second, you get a quick lesson. If you're a PredictIt trader and you are basing something on information which is not accurate, you'll get a quick lesson. For instance, I mean, right now, the Republican presidential nominee, Trump, is at 33 cents to be the GOP nominee in 2024. That's 33% odds, or 33 cents. He's up a penny. Number two is DeSantis at 24 cents. You may like Trump to be the nominee, I'm saying, as an investment at 33 cents, and hate him at 43 or 53 cents. So you need to know when to get out. Even if you're sure an event is going to occur, sometimes it pays to get in at a lower price and then get out before the event occurs.
All right. So the money, in a way, makes you more accountable, let's say. We've got to wrap up, but apparently, according to the internet, you designed an atomic bomb in college. So I just wanted to give you a couple of seconds to explain. What's that all about?
That was 40 years ago when I was a student at Princeton. I don't know if I think most of your traders weren't even born then, or maybe they were in diapers. I resent that. I was a physics major at Princeton, an undergraduate. This was a project I undertook with my professor, and it got a lot of attention.
All right, fair enough. From atomic bombs to prediction markets. Thank you, John, for joining us this morning. That was PredictIt CEO and co-founder John Aristotle Phillips. That's it for First Mover. Thank you, Emily Parker and Lawrence Lewitinn. I'm your host, Christine Lee. I'll be back live at 3 p.m. with All About Bitcoin. Coming up at noon is The Hash. You're watching CoinDesk TV.